Hey everybody, Mike Vaki, PrincetonTrader.com, here with the closing wrap-up. Getting this out a little later than I normally would. I was running around a little bit, but I wanted to come out and do this tonight because I wanted to tie together what we talked about this morning, what happened in the tape today and where we are now, and then we'll pick it up. We'll see where we are in the morning. Look, we talked about the 200-day on the continuation chart. 200-day exponential moving average, basically at 42.96, call it. Well, welcome to where we are. We talked about how on Wednesday, the Bears had done literally everything that we had asked them to do. And when we were talking, we were in the process of testing that daily midband, the green line from underneath. We did see a decent little battle over the daily midband during the course of the day. A lot of that had to do with Powell's comments at noon. But ultimately, the Bears won that battle. Took it down, did a lower low versus yesterday, made lows of the week. And now, as you sit here at the 200, you're really, here we are. This is where the market tends to do a lot of longer-term soul searching. 200 day. What does this thing want to be? Are we in a bear market? COVID, etc. We were under the 200 day for months and months. From say 2000 to summer of 2009 until COVID, with the exception of a couple of blips here in between, we spent say 90% of our time above the 200 day. Okay, we have been above the 200 day now. Well, since March. We really battled it over here in February and March for a while. We could do that again here. We tested it back in September, earlier this month. You had the 42.35, then the higher low, and the up and through was where you really had, we were looking at ourselves, and I was saying, this might be where the Bears have blown it. Do you need to go back here? Well, maybe not. You held in the 50. You made highs at 44.30, 44.23 lower high. Now you're down here. The whole key, though, we go back to, it's 42.35. Can you take it out? Can you take it out? Sooner the better. And if you can, it really opens up some lower prices. The low from October the 6th, so what's that? A couple Fridays ago? 42.42. If you're a bear, you wouldn't mind seeing that, say, by Monday. Then you get into 35, and then you're kind of down here. You're in, it's, if it was the upside, we'd say, you got blue sky. Now you got Wile E. Coyote, potentially. Now, I know that gets the Bears all excited. Oh, you're talking about Wile E. Coyote off a cliff. We're going to go down. All right, settle down. Settle down. Settle down. Settle down. I know you guys get excited. Because the easiest thing on planet Earth to do is to short a market that's going straight down. Which is why everybody wants the market to go straight down every day if they're a trader. Because it's really easy, and it's easy to look really smart while you do it. Calm down. They didn't do it last time. Unless you have news as a tailwind to that, you ain't going to get it this time. Now, there's a whole lot of different places where you can get news. And the bear case always makes a hell of a lot more sense than the bull case. So, either you get that kind of a scenario where you're, where you have something that's really going to push this thing down, or you're going to get some kind of a rejection, and then we're going to have to figure out whether or not it's the real deal to the upside. But let's just talk about right now, okay? This thing has got a few sessions to figure out whether or not it can actually convert the 200-day to resistance. If it can take out 42.35, then they're in control to the downside. If they're not able to do it, and they can't take out 42.35 in the process, then you're left with another higher low, and on a move up over that 44.40, then you really do open up those 4,500 areas. Do I think the bulls can do that? Yeah, but I think they're going to need news as a tailwind to that as well. Nobody's getting the big move without some news. Absent news, you can see what we're doing, which is a whole lot of consolidating and knife fighting in a phone booth. Not in super small ranges, but small enough that it gets annoying sometimes. Although I got no complaints about this week, that's for sure. So what we're doing right now is we're short. We laddered down at 45, so and we were long short all day. I mean, there were some big chunks of price to find, which is always fun. We've rolled our stops down from 45 to 15. We'll see if that survives the night, and we'll pick this all up in the morning. But I wanted to come on tonight to just say, look, we're hanging around at the 200. Don't get too excited one way or the other, but if it was going to break down, that's kind of how it would go. So, everybody have a great night. Market Webcast in the morning. Like us, subscribe on Circle to the free end. Then, put yourself in a position where we can help you. Come check out the premium stuff that we have. A lot of exciting stuff going on there, and it's really good to see a lot of new people sign up and people come back, and it's always a lot of fun for me. So we would love to meet you. All right, take care, trade them well. We'll talk in the morning. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.